Hello, this is Books of the Stock Market. How's everyone doing? As for me, I came back from my run and I feel pretty good. I guess this is why people always say to exercise so that your body can produce those natural endorphins and make you feel good. It is like an innate positive feedback loop where your body makes you feel good after exercising, and in return, you keep exercising so your body doesn't rot away. Other than that, there is some unfortunate news. The bad news is that next week it seems like it's going to be cold again, which is really unfortunate. I was enjoying the warm weather in the middle of November, but it seems like that next week it may be snowing. Okay, enough of me talking about my life. Let's get to today's video. Last week, we wrapped up on reversal patterns by talking about double tops and bottoms, rounding bottoms, and spikes. Starting from this week, the next two videos will be talking about continuation patterns. This video will introduce triangles, which is the first continuation pattern we will be looking at. Before we go into triangles, let's first define continuation patterns. A continuation pattern is when the stock moves sideways. This sideways movement usually represents a pause in the current trend, and the pause may be due to the stock being overbought or oversold. Also, continuation patterns are usually shorter than reversal patterns. Now that we have understood what continuation patterns are, let's get started off with the first type of continuation pattern, triangles. There are four types of triangles. The first one is called the symmetrical triangle. The second one is called the ascending triangle. The third one is called the descending triangle. And the fourth one is called the expanding triangle, which is also called the broadening formation. Before talking about the characteristics of different triangles, let's first talk about the parts of a triangle. The green line represents the upper line. The purple line is called the lower line. The blue line is called the base of a triangle, and the red dot represents the apex of the triangle, or where the upper line and the lower line meet. I will be referring to these lines with these terms from now on, so please take note. Now that we know the parts of a triangle, let's get into the first type of triangle, the symmetrical triangle. As with all triangles, symmetrical triangles must be made of 4 points. Why do we need 4 points? We need 4 points because we have two lines, the upper line and the lower line. At least 2 points are needed to make up a line. Therefore, we will need at least 4 points to make a triangle, where each line will have at least 2 points. For a symmetrical triangle, the upper line is made of lower highs. Since you need 2 points, you would need to wait for a lower high to form. Therefore, the upper line would have a negative slope. The lower line is made up of higher lows, so you would need to wait for at least one lower high before you can start drawing your line. Therefore, the lower line would have a positive slope. Here, we see an example of a symmetrical triangle. Points 1 and 3 are the minimum amount of points needed to make the upper line. Point 3 is the first lower high formed, which is necessary for the upper line of a symmetrical triangle. As you can see, this forms a negative sloped line. Points 2 and 4 are the minimum amount of points needed to make the lower line. As you can see, point 4 is the higher low formed, which is once again crucial for the lower line of a symmetrical triangle. This causes the lower line to have a positive slope. In this case, there are 2 more points as shown in points 5 and 6. Moving on from the characteristics of a symmetrical triangle, we will now talk about the duration of a triangle. This concept applies to all 4 types of triangles, so make sure you understand these concepts. Due to the nature of a triangle, triangles have a specified duration where the beginning will be at the base of the triangle and the ending will be at the apex of the triangle. This means that triangles give us information in 2 ways. The first type of information is that future price, as we can predict price by the 2 converging lines. The second type of information is time, as we can use the horizontal length of the triangle. Next, price needs to break out before 3/4 of the triangle has formed. So this means that price should almost always break out before reaching the apex, or else the pattern is weak and should be avoided. What direction the price breaks out to is dependent on the previous trend. So, if the previous trend was an uptrend, the upper line will be penetrated and will now become support if price retracts back to the triangle, as it sometimes does. In a downtrend, the lower line will be penetrated and this becomes resistance. The apex can also act as a region of support and resistance. For symmetrical triangles and all other triangles, these rules of volume should be followed. First, volume should decrease as price develops further into the triangle. This is true with all consolidation patterns, where volume will decrease the longer the stock goes horizontally. The second rule about volume is that there is a small tendency for volume to be heavier when moving in the direction of the trend. For instance, a triangle is made up of zigzags, so the zigzag will start off wide and then gradually become more narrow, forming a shape of a triangle. Let's now say the previous trend was an uptrend. Then if you look carefully at the zigzag, there are times when the ascending lines of a zigzag would have more volume than the descending lines of a zigzag. The third rule about volume is that volume should pick up once the trend line is broken to confirm the breakout. The final rule about volume is that if there is a return move to the broken trend line or apex level, it should be on lighter volume. Next, let's talk about how to calculate where price will be after a breakout for a symmetrical triangle. These rules can also be applied to other triangles. One way to predict price is to measure the height of the base and add that to the breakout point. The other way is to draw a trend line parallel to the lower line from the top of the base. In a downtrend, you would draw a trend line parallel to the upper line from the bottom of the base. Also, in both cases, price sometimes hits this newly drawn trend line at the point at which the apex is formed. If this didn't really make sense, it is not your fault because I had difficulty putting this into words, so coming up is an example of how to predict price using the second method. Here, we see a symmetrical triangle that I showed earlier. The first thing we need to do is to draw a line that represents the base. I drew this blue line to represent the base. Then, we would have to clone the purple lower line and move it to the top of the base. After that, I drew this pink line from the apex to help me see where price would project to. If the stock was following the second method, word for word, it should have developed this type of graph. But most of the time, the safest way is to use the first method for predicting price, where you would just add the height of the base to the breakout point. The second method also allows you to predict the height of the move and the timing of the move, but more often than not, it does not match in the real world. Now, let's move on to the second type of triangle. The second type of triangle is called the ascending triangle. The ascending triangle has an upper trend line that is flat and a lower line that is sloping upwards. This means that there are more buyers than sellers, meaning that this pattern is a bullish price pattern. The breakout happens when price closes above the flat upper trend line. Like all triangles, the same rules of volume and price action after the breakout apply. The one unique fact about this triangle is that it can signal a bottoming pattern. This means that in a downtrend, if an ascending triangle forms, this means that there may be a reversal coming, or at least this might be a bottom. Here, we see an example of an ascending triangle. The purple line represents the flat upper trend line, while the green line represents the lower trend line that has a positive slope. We see the upper trend line is made up of peaks of relative similar heights. As for the lower triangle, we see that it is made up of lower highs. Here is when price breaks out of the triangle, and as we can see, this should happen at around 3/4 of the triangle has formed. Furthermore, when price breaks out, it should be done with heavy volume to confirm the price action. In the blue circle, we see a retest, and this should happen with lower volume. The third triangle is called the descending triangle. This is where the lower trend line is flat and the upper trend line is pointing downwards. This means there is more selling than buying, so it's a bearish price pattern. The breakout signal is when price closes under the flat lower trend line, and like all triangles, the same rules of volume and price action apply. This type of triangle can also serve as a topping pattern. For instance, if a descending triangle is formed in an uptrend, then the trend is weakening, and it may be a sign of a reversal. Here, we have a descending triangle. The purple line represents the upper trend line, and it has a negative slope. The green line represents the lower trend line, and this time it is flat. We see that for this graph, 3 lower highs make up the upper trend line. The green line is made up of two troughs of similar levels. Here, we see a breakout happen, which should occur 3/4 of the way into forming the triangle. This breakout should be confirmed with more volume. Here, we see a retest, and this should happen with less volume. The last triangle is called a broadening triangle. This is a relatively rare pattern, and that is pretty good for us because this pattern is really hard to trade. This triangle is made up of an upper and a lower trend line that diverge. So the upper trend line would have a positive slope, while the lower trend line would have a negative slope, causing a widening pattern. As the price range increases, volume expands in both directions. This is due to the market being out of control and especially emotional. This type of pattern is usually seen at major market tops and bottoms. Here we see a broadening triangle. The broadening triangle is made up of a purple line that represents the upper trend line, and it's pointing upwards. On the other hand, the green line represents the lower trend line, and we see that it's pointing downwards. This causes the triangle to widen. In this case, the upper trend line is made up of 3 higher highs, and the lower trend line is made up of 3 lower lows. If you see this kind of pattern, you should probably sit on the sideline because it is very hard to predict when price breaks out in either direction. Now that we got all the concepts out of the way, let's look at a real-world example. So what kind of triangle do we have here? If you answered an ascending triangle, then you are right. How do I know this is an ascending triangle? I know this because the upper trend line is represented by the purple line and it's relatively flat, while the lower trend line that is represented by the green line is relatively sloping upwards. We can see that the upper trend line is made up of 4 general areas. As you can see, not all wicks touch the line, but we have to be a bit flexible in the real world. The lower trend line is made up of 5 points, and we see that the line fits better than the upper trend line. Now, let's move on to volume. What should we see with volume? We should see volume decrease as more of the triangle develops. So I drew this line, and at this point, we see that after the base of the triangle, volume decreases. Here, we see the point at which price breaks out of the triangle, and we see that breakout happen a little bit later than 3/4 of the horizontal length of the triangle. We should see an increase of volume to confirm this breakout, and we do indeed see this. Well, that's it for this long video. I hope everyone learned as much as I did reading the book, as that is the whole point of this channel. In this video, we learned about triangles. The next video will continue to talk about different continuation patterns, such as rectangles and flags. So if you don't want to miss out on these topics, please subscribe to the channel. If you enjoyed this video and felt like you learned something new, like this video as it really supports the channel. If you have any questions, leave a comment below and I will try my best to answer all the questions. Well, this is Books of the Stock Market, and I'll see you guys next Wednesday at 3 p.m. Central Time. Thanks.